Hi, everybody. Scott Riley, the Market Update Desk, December 19th. Wow, yesterday was pretty painful in the market, and today is stabilizing a little bit, but we're definitely not to the positive side. We're still taking on water in the market. Yesterday we had the Fed meeting commentary. We're going to break down some of that and some of the other data that came out today. Currently, mortgage-backed securities are down 6 basis points. The big one, 10-year bond, is up 7 basis points, and we're sitting at 4.5702. Remember a couple of weeks ago, we warned everybody that we were likely going to go above that 4.50 level. So these are very important levels to watch. Now let's go through what happened yesterday in more detail with the Fed decision. Now the Fed decision, the headline was they lowered it 0.25%. The big part is what they did in their statement of economic projections, or SEP, or dot plot. That's where they go through and give their idea of what we're going to look at in 2025 and 2026. So the market was anticipating, based on the Fed members' previous statement of economic projection, that we'd get 4 cuts next year. Looks like that's gotten halved to only a 0.5 point versus 1 point. And they're also seeing the unemployment rate a little higher next year, and inflation. Let's go through some of these numbers here. So for unemployment, what the majority of the Fed members, in fact, 14 of the Fed members don't see unemployment going above 4.3%, while all 19 don't see it going above 4.5%. So they raised the expectation, the consensus, from 4.3 to 4.4. Wow, if we get even a little tick higher on unemployment, which is possible after that February QCEW quarterly census on earnings and wages, that could put pressure on them to change their tune when it comes to unemployment. Now, GDP, gross domestic product, they raised guidance from 2% to 2.1. Headline PCE, the big inflation number, they increased the projection from what was 2.1 expectation all the way to 2.5. That's a pretty big jump. Core PCE, they also raised guidance from 2.2 to 2.5%. These are big things. Now, this is so much of the PCE is related to shelter costs. One interesting data point that came out today is CoreLogic's rent index for December showed that rents month over month, increased 1.7%. And year over year, it's now at 1.7% from 2%. So we're seeing decline in the rent renewals, which we set up for a long time. Eventually, that has to flow through to PCE because it's such a big factor within it. Now, existing home sales, we got some good news here. Closing on existing homes. Now, keep in mind, this is from when people were shopping September, October, when rates were lower, and closing in this cycle. So keep in mind, it's not grabbing the data from when rates have gone up. So that's going to change some things in January, February. But for this report, showed that the month over month sales increased 4.8% to an annualized pace of 4.15 million. That's a jump of 6.1% in sales this year of existing homes. Median home price is still very strong at $406,000, up 4.7% year over year. Keep in mind that's a national average here locally. I think we're definitely stronger than that. Inventory showing 1.33 million units available, down 2.9% month over month, but we're up a little over 17% year over year. So we're headed in the right direction, but still drastically under amount of inventory that we need for demand. The current national supply of inventory is a 3.8 month supply. Traditional market year, 4.6 to 4.7 months of inventory is a stable market. Now, locally, we're sitting at about 1.5 months. That's up considerably from where we were at about 0.8 months, but still nowhere near the demand we need. The average of 32 days on market, up from 29. 18% homes sold above list. First-time home buyers accounted for 30% of the transaction. Cash buyers still super strong at 25%. Quarter of all transactions are cash. Investors made up 13% of transactions. Final Q3 GDP came in. That came up a little stronger than expected at 3% from 2.9%. Initial jobless claims. Now, it's still pretty elevated, but better than last week. We were 220,000, which is down 22,000 week over week. Continuing claims were down a little bit, 5,000, still very elevated at 1.847 million continuing claims files claimed. Now, this is also important because it is the week that they use for the jobless claim. So this is a very important the sample week. Where are we going from here? Tomorrow we get PCE, and we've talked about it. That's going to come in higher month over month. So we're going to see some more pain most likely tomorrow. The opportunity maybe for the next week, Christmas week, to maybe gain some back, but it's a short week in trading, so I wouldn't expect too much. I don't think we're going to gain much traction realistically in rates until the first of the year. Hopefully this helps you out. Give us a call. We'll explain in more depth, help you get pre-approved, work with your agent to help get your offer accepted. Scott Riley, the Market Update Desk, your original singular market news source for West Michigan. Have a great afternoon.